is exactly. And shame on any court which looks at this and can't correlate Minneapolis Star.
Please be sure to like, share, and subscribe to these videos. It's a way that you can directly contribute to those efforts in California so that we can keep
on time, you guys. Everybody is here. Let's resume our meeting. Thank you again for being back. I am getting an echo. Am I good? Yes, I am. So we are now going to go back to our item 4 that we skipped before lunch. And item 4 is the report of the Secretary and Treasurer, Mr. Aguilar. 4A, overview of the of the budget process. And we have speakers, so you want to introduce the speaker?
Called in reinforcements and the heavy hitters here. And as I understand it, from the Department of Consumer Affairs Budget Office to present a overview of the budget process. Thank you for being here.
Good afternoon, board members. I am Sam Dyer, Fiscal Specialist with the DCA Budget Office, and I have with me Suzanne Balkas and Matt Nishamini. I'll be talking about how to navigate the budget process, the stages of the process, how budgets are built, and the role of the board. Next slide. We'll start with an introduction of our budget office at DCA. Then we'll overview the annual budget process, the methods for building your budget through incremental budgeting, and the fiscal responsibilities of the board. We'll close by answering any comments or questions that you have. Next slide. The Budget Office prepares and builds the annual budget for all of the programs at DCA. This includes facilitating communication between the boards and other agencies like the Department of Finance, Business Consumer Services and Housing Agency, and the legislature. It also includes maintaining and updating the board's financial statements and projections. Building the annual budget comes in 3 stages. Stage 1 is the development of the governor's budget, which releases on January 10th. Stage 2 is the spring process and the development of the Budget Act, which releases on June 15th. Stage 3 is the implementation of the Budget Act in the budget year. Next slide. This flow chart illustrates the 3 stages of the budget process. The fiscal year begins on July 1st. The Budget Act for the current year took effect on July 1st. In stage 1, from August to December, departments begin making adjustments to the enacted budget, making additions or subtractions. These can look like, for example, employee compensation adjustments, retirement rate adjustments, or budget change proposals. These adjustments made to the Budget Act are built into the governor's budget, which is released on January 10th. The governor's budget is accompanied by a budget bill. In stage 2, from February to June, the State Assembly and the State Senate consider what's been introduced in the governor's budget, and there begins a process for the legislature and the administration to negotiate the budget. This spring process is a period of hearings, negotiations, and meetings between lawmakers to consider what's included in the governor's budget and determine if it needs to be increased or decreased. It culminates in the May revision in the month of May. The governor's budget plus or minus the difference in the May revision is what we see in the enacted budget. By June 15th, the budget bill passes through the legislature to the governor, and upon signature becomes the Budget Act. Stage 3 is the implementation of the Budget Act in the budget year, beginning on July 1st. The Budget Act is what tells departments their appropriations, the levels within which they can spend during that year. The DCA Budget Office works with its boards to help them operate within their budgeted levels, track the condition of their funds, and project their condition into future years. Slide. The release of the governor's budget on January 10th to the legislature is required by the state constitution in Article 4, Section 12. The state constitution also requires that the legislature pass the budget bill to the governor by June 15th so that he can sign it into law. The approach that we use to build a budget is called incremental budgeting. This approach uses the current departmental level of funding as a base amount to be adjusted. The budget change proposal, or BCP, submitted to the Department of Finance has been the traditional decision document which proposes a change to an existing budget level. But there are multiple ways to go about changing the budget. The three main methods we will discuss are statewide budget letters, budget change proposals, and legislative changes. Statewide budget letters are budget adjustments issued statewide by the Department of Finance. There are certain budget letters that are issued yearly to every department, such as the salaries and wages drill, retirement rate adjustments, and the employee compensation adjustments. The Department of Finance can also issue other budget letters, such as those that reflect the priorities of the administration. Next slide. And I invite Suzanne, if you'd like, to talk about some of the budget letters from this year.
So, can you hear me? Okay. So there was two budget letters that impacted the board this year, and it is going to be shown in the May revise. And the first one is the vacancy savings and position elimination, which is budget letter 2420. So the Department of Finance issued a budget letter for a vacancy savings and position elimination to reduce the state workforce by 10,000 positions and $1.5 billion, which is $762 million from general fund and $738 million from special fund. The budget letter 2420 reduce will be effective starting 24-25 and ongoing, while the position elimination identified will become effective 25-26 and ongoing. The next budget letter was the government efficiency reduction, budget letter 24-24. The Department of Finance issued budget letter 24-24, which is the government efficiencies reduction. And this budget letter provides instruction to implement the control section 4.05, which is a reduction required in the 2024 Budget Act for development of 25-26 governor's budget.
Both of these budget letters are intended to reduce the cost to the state, but they are not effective yet as the administration has not fully made the decision yet until May. Next slide. The second method of incremental budgeting is the budget change proposal, or BCP. And a BCP requests additional resources, and resources can be money or they can be positions. These proposals are very data-driven. So to give a quick example, if the board has 4 staff who collectively can process 40 applications a year, and they are receiving 50 a year, they could submit a BCP to the Department of Finance for 1 more staff member, initiating a change to their budget. The Board of Accountancy submitted a BCP for 2 program technician 2s in the licensing unit to handle calls. And if approved through legislation, the BCP will be effective July 1st, 2025. Slide. The third method of incremental budgeting is a legislative change to the budget. After the governor's budget and budget bill roll out, the spring process happens. Items are heard by the legislature, who has the power to approve or to deny. Denying would equal a reduction in the governor's budget. They can also add items that did not originate within the department, and this would equal an increase in the governor's budget. Slide. And I invite Suzanne now to talk about fiscal responsibilities of the board.
Thank you, Sam. I will be going over the fiscal responsibilities. The board have to operate within its budget and cannot exceed appropriation. In addition, the board must comply with all of the restrictions and limitations set by the legislation. The budget office monitors the board's fund, expenditure, and revenue in a monthly basis and report it to the board. As a reminder, board members have a fiduciary responsibility to ensure the board maintains expenditure within their authorized appropriation and can do so by reviewing the board's budget reports and expenditure projections on a routine basis. Next slide, please. So what is your budget? The board's budget, it is the amount that we have, that they get appropriated to spend during a specific fiscal year. Again, this amount changes every year. The budget office tracks the board's budget monthly by using projections, which is a tool used to monitor a board's expenditure and revenue throughout the fiscal year, and can assist the board in making financial decisions, while also ensuring the board keeps its expenses within their authorized appropriation. These reports are updated on a monthly basis and are regularly provided as an item in a board meeting. Budget reports provide board members with an opportunity to see how the board is expending its funds, with all expenses broken out into categories, such as personal services, which includes salaries and benefits. We have operation expenses, which is including the rent, equipment, and any enforcement costs, just as to name a few of them. And we also track revenue and reimbursement to ensure we are on track of what was projected to bring in by the end of the fiscal year. We will communicate and work with the board if we have any issues or concern. Next slide, please. What you'll see in the expenditure document is the board's budget, how much the board spent in each line item, current year and prior year expenditure, what have been encumbered, and what we are projected to year end, and what is the remaining balance. Slide, please. So what's the relationship between your fund and your budget? Your budget is appropriated from your fund. It's similar to the check that you takes money from your checking account. The budget office monitors the board's fund using the fund condition. A fund condition is a document that provides an overview of the status of the board's special fund, and it displays multiple fiscal years and provide the board's past year expenditure actuals, current year authorized, and budget year estimated revenue, expenditure, and fund balance. We provide the fund condition for the board with the beginning balance, which is based on a prior year ending balance, and a prior year adjustment, which is any purchases or revenue that was made in this fiscal year for prior fiscal years. Revenue, which is going to be actuals for the prior year, projected for current year, and based either on a budget, governor's budget, or budget act for budget year and ongoing, depending on where we're at in the process. Expenditure is based on actuals in budget year, projection in current year, and governor's budget or budget act in budget year and budget year +1 is based on a 3% increase to accommodate for any increase that we have for GSI, which is based on the bargaining unit contracts. Next slide, please. So the fund balance and reserve, these are tools that we use to monitor and project the future health of the fund. And we determine if the fund balance is growing or declining. By using this tool, the board can determine when we need a fee increase, or if we have decline in the fund, or in some cases, if we need to lower the fee. And these are rare cases that we have, that the board fund balance is growing beyond statutory mandate. A commonly used metrics to monitor a fund health is months in reserve. This metric takes the ending funding balance for a specific fiscal year and compares it to the board's total authorized expenditure, providing the total months of a fund could sustain operating without collecting any revenue. For example, a fund with 12 months in reserve could sustain operation a full year without revenue being collected. Pursuant to the current law, the board may not have more than 24 months in reserve. Please let me know if you have any questions for us.
Any question from the board? Yes, Mr. Ria.
Thank you for your presentation. You mentioned in the course of the conversation that there was you were budgeting for a 3% increase. And what was that for?
So what we do in budget year is going to be based on what we have, whether it is the governor's budget or budget act, but budget year +1 is a 3% increase. We get bargaining unit contracts, they get 3% increases in GSIs. And so we try to accommodate for any increase that we're going to see, whether it is position-wise, salary-wise, or any contracts or anything. But it does not include enforcement.
So generally the 3% is it's a personnel item.
Yes.
So in the personnel item, I'm not quite sure of this, but most of the state staff are unionized. So there's a negotiation between the administration and the unions that come up with a number. What if the number exceeds 3%?
That's what we just put, because sometimes it can exceed 3% and sometimes it doesn't exceed 3%. And then there's other adjustments that are associated with it. For example, there is some benefits, whether it is health and dental benefit or other adjustments that accommodate that. So we are not accounting for that. We just account for what we can, which is typically is the 3%.
So if there's a negotiation that is, say, it's 5%, you would build that into the budget, not limit it to 3%.
We just built 3%.
Hi, my name is Matt Nishamini. I'm also with the.
Sorry if this is my
No, no.
first meeting,
That's
so
great.
excuse me for this.
Right, so, the governor's budget is a set amount based upon the incremental increases based upon the bargaining agreements. So those are real numbers. Those are real,
Fixed
those are real
numbers.
increases. So if it's 8%, we're building in 8%. If it's 3%, we're building in 3%. But what my colleague is referring to is out years, which are beyond, because we only budget out to the governor's budget. So governor's budget +1, we're not actually have official budgeting yet, but we're projecting 3%. And we're doing that primarily because most state staff are in the 3% range
Got it. Thank you.
historically. Yeah.
Yes, thank you for that clarification. Anybody? Yes, Ms. Hine.
Hi, thank you. With the creation of the budget letters, the two that y'all referenced were general to the state. Are budget letters ever created that are targeted towards specific, agencies or departments, or, are generally our budget letters intended to be broader?
So generally, there are broader because it is for all state departments and not specific for one. So if there is anything specific, that's going to be through the PCP if the board requested any positions.
So if I heard correctly, you may need to correct me. Those two general letters, it's not enforced at this point
No, it is going to be in the May revise.
in the May revise. Yes. Any other questions, comments? Now I would like to open up to Sacramento audience. Seeing any comments? Seeing none, we still have nobody on WebEx. So thank you very much for the presentation. I appreciate you all coming to do the presentation.
For having us.
All right, thanks. All right, we are now going to item 4B, discussion of fiscal year 2024-25 mid-year financial statement. Mr. Aguilar.
A tough act to follow. Thank you, you guys. Provided for your review is the mid-year financial report for fiscal year 24 and 25 in your packet, 8 pages. And the CBA's budget authority is now set at $19,785,000. And this accounts for a reduction in employer retirement contributions, which was a budget letter, an increase in employee compensation, a different budget letter, for an overall net budget decrease of $70,000 from what was originally contained in the governor's report. The CBA's current budget will likely be adjusted further to reflect the elimination of 3 vacant positions and a cost efficiency reduction estimated at $32,000. Those are 2 more budget letters, just to bring the examples to our current situation here. And then if you turn to page 2, CBA revenues for the period of July 1 through December 31st, so 6 months, totaled $12,291,318, as reflected in the table on page 2 of the report. There was a minor typo in the narrative showing the total revenue off by $1. Projected revenues are anticipated to exceed $21.6 million by the end of the fiscal year. The fiscal 6-month financial statement located on page 3 reflects actual expenditures as of December 31st, 2024, which totaled $9.8 million. So there's 3 columns there. The budget, the first 6 months that we're talking about, and at the bottom of that first 6 months is the $9.8 million. And then the last column is a projected 12 months. The fiscal 6-month, let's see, the CBA is currently projected to end the fiscal year with a budget surplus of 6.9%. So the budget is 19.8 million in round numbers. it's projected to be, our actual expenditures are projected to be 18.4 million in round numbers. Page 4 contains a new table in response to CBA request for additional information on comparing current and prior year fiscal year spending. So comparing 6 months from the prior and our current 6 months. The information reflects an overall increase of 4.1% in spending when compared to the period last fiscal year. And then for your information on pages 5 through 7 are descriptions of individual line items. And last, the fund condition statement, I think of as the balance sheet, on page 8 reflects increased revenue from the fee increase that took effect this fiscal year and projected revenue for the next fee increase that will occur in fiscal year 26 and 27. The additional revenues are having a positive impact on CBA's fund balance and months in reserve total. So if you look at the actuals from last year in the first column at the very bottom, we had a fund balance of 21.1 million. And then if you go to the top of the next column, which is the current year, you see that 21.1 million. And then there's a projected ending fund balance at the bottom of that column of 23.7 million in round numbers, which represents 13.4 months of expenditures. So without any additional revenue, we could operate for 13 months, and it grows from there. This concludes my presentation, and I'm happy to answer, or more likely than not, have staff answer any questions members may have.
Thank you, Mr. Aguilar. Ms. Hines?
I like to think of you as a facilitator of the discussion. How about that? I just had a question about whether the strategic plan may have some costs associated with this. More for staff. Do you anticipate that the strategic plan, with the goals that have been stated, might have some costs associated with implementation, with some of the advancements and digital tools that we're talking about? And, you know, are there anything that should be on our radar that we should be thinking about?
Ms. Pierce, you have the...
Yes, absolutely. Some of the different tools you were talking about for our, customer service, some of the things that we explored there. Probably the biggest one in our strategic plan that I can think of is in our business modernization area. The CBA Connect platform, as we continue to build that out, that will probably be the largest in terms of expenditure that I can think of as we move forward. So that's something that we, even outside of the strategic plan, have been thinking about and budgeting for current and future years. But that will definitely probably be the biggest one I can think of. Timing on that. We currently have a contract for our business modernization services. It's a 3-year contract, split up, $300,000 to $400,000 a year. So we'll probably enter into something similar, probably a 3 to 4-ish year contract chunk at a time. And in terms of a guesstimate on cost, I know it'll be more than the contract we have now because prices have gone up. So I could give you a guess, but it really would just be a guess. Our current contract for 3 fiscal years was 1.3 million, give or take. So the next contract, I'd say we're looking at probably about the same, if not more, just because of hourly rates have increased since we entered into the current agreement. So that'll be something that we look at as we move forward and make some decisions about whether or not we need to go in for a budget change proposal to increase our budget, or whether or not we have enough existing funding in our authorized budget to pay for it. So that's something that we work with Dominic on, Department of Consumer Affairs, budget staff, leadership.
Right. I have a question. I'm trying to recall if earlier we talked about the lease for this space here, and I remember a couple of years ago we talked about moving back to the office in DCA. Thank you. can you give us a update on what's transpired and just remind us what's happening?
Sure. So going back in time, about 18 months, we were in a work environment where most staff were working remote. And we had quite a bit of space here that was not being used. And so we had been working towards a project to downsize our office space and actually move out of this location over to the Department of Consumer Affairs headquarters office. It was a smaller space, but would meet the needs at that time based on the current work environment where we had staff teleworking, primarily teleworking. And then shortly after we started exploring that, there was discussion and then eventually an executive order that required staff to return to office 2 days a week. And under that executive order, that new space that we were exploring wouldn't fit us. So we decided to stay put, and we began working on renegotiating the lease here. And so we've been actually working on that. The lease was just signed recently. We just got that finalized. And we've been working, as Christy mentioned, on tenant improvements here. We have enough space for all the staff and all that, just kind of other tenant improvements that we've been working on. And I believe for the May board meeting, we'll be bringing back costs on the lease. We're saving some money, so we got some price reductions. We eliminated some parts from the lease where it's what's the term I want to use, where it increases based on the price index? Yes, thank you. Sorry, the CPI, I believe that was removed from the current lease where it was part of the prior lease. So we had some unknown future costs. So we definitely have some cost savings underneath the new lease that we're entering into. And if I recall correctly, it's a 4-year hard lease and then I think a 4-year soft lease after that. So, so in a nutshell, that's.
Yeah, so basically the saving between that, because I remember at the time the move was going to save us some money in terms of connection to our budget. And this one, it's about the same amount or?
I'm going to say no.
Less?
Yeah, it's definitely savings over what we were paying under the prior lease, but it's not saving as much as it would be. But we also have a lot more space here, a conference room, that kind of thing. So we're occupying more square footage than we were at the other place, but there is savings beyond what we're currently paying.
All right, thank you for that reminder. Yeah. And I think any other board member have any questions, comments? Seeing none. Anybody from Sacramento audience? Seeing none. It's not a Mr. Aguilar. Can we close that item now?
Yes.
Well, you just did a great job. I thought you might want to continue. All right. Moving on to the next item, which is item number 9, other business. 9A is American Institute of Certified Public Accountancy. And on the number 1 is report on meeting of the American Institute of Public Certification, Certified Public Accountants, attended by our representative, which is Mr. Corrigan.
Thank you, President Chu. Yes, I attended the virtual meeting of the State Board Committee, and that was on February 19th. And of course, we did all the administrative types of matters and procedures, reviewed minutes, et cetera, from the October 8th meeting. Moving on, each jurisdiction represented, and there are maybe 13 members or so, I don't remember, spoke about hot topics in their jurisdiction. And of course, I spoke about Assembly Bill 1175. We had a rather robust, though it's tending to calm down over time, regarding substantial equivalency and mobility types of topics, because we know different jurisdictions have different ideas and are taking different actions. Another interesting discussion was whether candidates can actually pass the exam with only 120 versus 150 hours. Some feeling that candidates may not be ready to take the exam, and others saying, why, yes, they certainly are. Some of us did it. But so differences of opinion and the values of, candidates getting their bachelor's and their experience and everything else and actually being ready and passing that exam. So it was very interesting. We got an update, of course, on the exam operations, pass rates, and sittings. They've added openings to accommodate the credit extension period that we know about. So that kind of opens it up and allows candidates to kind of get in. They're continuing to work on their cloud drive project that I previously mentioned to become even more automated, efficient, that sort of thing. They are expanding candidate communications via emails, et cetera, to kind of stay in touch with candidates, reminding them about sitting for the exam, and also score release dates, that sort of thing. So really enhancing communications. They are working on improving the timing of score reporting, which candidates, of course, are delighted about that, anxious to get their scores and how to proceed further. Another interesting thing is that NASBA hired a candidate data analyst to analyze candidate the licensing data, how to improve the volume of exam takers, understanding the trend of exam takers, that sort of thing. The volume of exam takers is kind of lower, but they're seeing kind of an uptrend to that. So that's good to hear about. That concludes my report, and I turn it back to you, Ms. Tu.
Thank you very much, Ms. Corrigan. All right. Any questions from the board? Any from the audience in Sacramento? Seeing none, we'll move on to the next item, which is 9B, the NASBA's reporting out on activities and meetings and so forth. And our first item is the Enforcement Resource Committee. Mr. Aguilar, you're up on that again.
Yeah, I can handle this one. We have not met in between meetings. There's no report.
Oh, good job. That was very well done. All right. Item 1B, continuing professional education. I need to take my glasses off. Continuing Professional Education Committee, Ms. Batchelor.
Thank you, Ms. Tu. I'm not as lucky as you, so here we go. We had a kickoff. I'm with the CPE committee, and that's the Continuing Professional Education Committee. We had our kickoff on 12/9/2024, and the committee was charged with promoting and developing uniform rules and requirements for CPE amongst jurisdictions. Jurisdictions meaning, all states. And then we also oversee the standards for CPE programs and the related CPE standards working groups. So we were developed as a working group in terms of a working group was developed to look at the 2024 CPE standard review project. And what that is every 2 years, the working group takes a look at the standards and how they are to see what type of updates or changes that need to be made. And it was determined that in those reviewing of those standards, a holistically change needed to be made with the advancements in technology and the transformative impacts of AI and other innovations and learnings that seem to be blurring the lines of instructional delivery and the methods that are currently in place. And so a task force was formed in April of 2024, and with this working group, they submitted recommendations to our committee to take a look at and for our approval. And so with those, we enacted was an exposure draft, which has explanatory language in it, based on recommendations, and then new statements on standards for CPE program. And with those new statements, that's incorporating technology, AI, and so forth. And then it was a red line 2024, the 2024 report was redlined with the new versions that were suggested. And so then we met again on January 27th of this year, and we also met on February 11th because we had a lot of work to do in terms of, redlining and reviewing, because the report is pretty significant, it's quite large. And so it's now comprised of 7 principles, and these 7 principles are, and this to make the report is more reader friendly, because the way it was before, it wasn't very effective, especially for the vendors to take a look at it, because the vendors that want to give CPE courses are some of the main principles that have to make sure that they're up to standard based on our requirements. So these 7 principles are the learning objectives that they have to be up to date on, quality of the CPE programs, participant engagement, CPE program completion and verification. And the 5th principle is CPE program measurement. Number 6 is the participants' communication. So they like feedback from participants such as myself that are taking these courses. And then number 7 is the required documentation for the CPE programs. So to document the progress. And so, like I said, the readability was improved, and there's not an effective date yet, because now with our input and what we suggested back to that working group, now it has to go through AICPA and NASBA, and those committees have to look at it. And then the AICPA and NASBA Board of Directors will finally sign off on what we recommended. Or they may kick it back to us and say, we want some tweaking or some changes or something like that. But as of now, that's about where we are right now. Nothing's finalized. They're trying, I think NASBA is planning to meet sometime in April. So we have our chairman and our vice chairman is planning on attending that NASBA meeting along with one of the committee members. And so they said in time they're going to choose a member. They haven't gotten back to us or sent an email and say which one of us was chosen to go and do a presentation on that, but we'll see. But we're trying to make it for that April 2025 deadline. So that's the end of my report. And if there's any questions, I'm free, feel free.
Thank you for that report. Any questions? Yes, Ms. Hine.
I'm not sure if I can bring this up because this is something that came up in the CPC meeting. So we haven't brought it to the committee yet, but it's in the materials. I'm looking at council just to make sure I can ask this question or if I need to wait till later. Because what I want to ask is whether or not the discussion that we're having and considering about continuing education courses that's being presented from the CPC, whether that work has any bearing or relevance to the work that you're doing with NASBA, where you're looking at, at continuing education being consistent across jurisdictions.
Right. Well, with ours, we're actually working on updating. And so for the 2024 that was presented to us, we saw the need that it needed to be updated. And so therefore, and especially with AI, most of the technology part is what, ChatGPT, all that, that's what enacted us to get this particular project going. Now, how that also relates to what we were talking about today, I think eventually in time that will catch up with it. And, but we have to get approved first. If I answered your question.
We meaning NASBA?
We meaning the CPE committee and NASBA. Right.
The CBA, our board should anticipate that there will come some recommendations for additional continuing education that we should be thinking about approving for or considering for our licensees. Is that where
That is
what I'm hearing?
exactly correct.
Okay. All right.
Yes, and like I said, the vendors are the main, piece of the puzzle because they're the ones that have to do. They're providing the courses for for everyone, for licensees and different things.
I'm asking this question because if licensees are out, professionals are out there using materials that there's not a consistent expectation of usage, and we also are not, there's not a consistent expectation of usage, then what is our responsibility as a board, as an agency, to be monitoring the usage of AI? I mean, it feels like we are playing some catch up in trying to understand, not just ethically, but professionally, how it should be used, how it, how it works, how it doesn't work. And I've asked this question before about, our board getting some more information directly about the usage of AI in the industry so that we can be informed about what would be acceptable. And, so
Right.
that's what part of why I'm digging at this a little bit more, exploring.
Right, and I understand what you mean. Just like when earlier today in our discussion, we were talking about the soft skills, like language, learning a new language or anything like that. And in my mind, it's just clicked to me since you asked this question, where, who are the providers for that? How will a CPE be counted? How many, in terms of hours and different things like that. So it's still a working process, and so we just. It's a huge report, and we made our recommendations, and we'll just have to see how that fallout is going to be. And then however it is, then that's when I'm sure it's probably going to be presented to this board.
And Ms. Hine, Mr. Gonzalez would like to add to this comment.
Thank you. So one piece just to level set a bit is the CPE standards, as Ms. Batchelor was talking about, are really driven towards the providers of CE, whereas our rules are focused on the licensee selecting appropriate CE. So we don't use the NASBA registry necessarily for approved providers, but it is a good benchmark for a lot of things that we do that we put into our own regulations. When we launched this exercise and worked with leadership and former President Rosenbaum on the CE changes that you're kind of taking in chunks along the way, we've been in contact with NASBA from the beginning, recognizing they were undertaking this exercise. We've been engaging with them back and forth on what they're working on and how ours is either consistent with or things we should be looking at or things we're asking them to look at, so that this kind of collaboration is happening. The AI component is one of those elements that this board will be looking at, not so much specific about AI, but if there's CE that's AI driven, what some of the rules and requirements should be around that, trying to be thoughtful about those modalities in the future. And so I think what our requirements are doing, and what I believe the CPE standards are trying to do, is get away so much from the specific modalities, but more about the quality of the CE. And because that's something that's more that you can handle a little bit, because we've gone from live and self-study to group internet based to nano learning to asynchronous and synchronous, like, so they keep adding these modalities, and AI is going to be something in there. So they're moving towards quality based CE. And so we're definitely engaged in those discussions, and we've actually seen the strike through an underlying version of what's been going on and trying to adapt as we are moving this project forward with this board.
Thank you for that comment. And also, I just want to add on to the fact that in January, when the current year board leadership met with the staff, that's one of the priority that was listed that we will work on this year. So your questions and comments are very tropical. Ms. Nancy Corrigan.
Yes, having served on the CPE committee a while ago, a few years ago, whatever, on NASBA, I just want to comment that it is largely CPE provider driven. And to address a little bit of Ms. Hines' comment, the providers have to qualify, and they are regularly reviewed, and it's pretty stringent. And to fall off of that list of providers is a really big deal for them. So if they're not meeting something, if the content, the hours, and how all of the credits are measured, all kinds of things are not met, they fall off the list until they requalify and get back on the list. And that directly affects their revenue, their ability to offer the courses, that sort of thing. So there is a really high standard and a real consistency between them. I can't just go out and take some course and hope I get credit. Pardon me, I'm losing my voice. But I have to make sure that there is a qualifying or registry number or whatever they call it, that they are on that list so that when I renew my license, I get credit for that. So there are many controls in place and the committee is excellent. There are layers of reporting. That committee looks at it, goes to the next one, the AICPA and NASBR involved. So there's quite a process involved. Thank you.
Thank you. Anybody else? All right, the next item is actually would be me reporting out on legislative support committee. We met on February 26th, and majority of the conversation was on staff presenting the different states that are dealing with the mobility and the whole licensing question. You have it's very funny. I was going to save this chart that they have with this the United States map and then the different state that are doing different things, but I said that would confuse everybody like nothing else. So automation, basically there are discussion and states that are doing from automation mobility tied to license in good standing to pathway legislation with no automated mobility. Some of the legislation that's happening around the country is some state have legislation to remove reference to the 150 semester hours, to remove reference to 150 hours, but added a bachelor plus 30 hours pathways to our legislation. At the time in February, we didn't actually have a bill yet, but now we have to adding a bachelor with 2-year experience and of course passing the CPA license. In September and November, we had a lot of those discussion already, so I won't bore you with the similar discussion that was at this committee. And to be continued this year, you can imagine there will be a lot of state legislation that is going to go past, and I will report back to you all as things become clearer and so forth, and I'll keep you posted. Any question for either Ms. Batchelor or myself on the committee? All right, I'm going to take both of this item with the public. Anybody from Sacramento want to comment? Seeing none, we are then able to move to our next. Ms. Corrigan, you do not have a report, but do you want to say anything?
No meeting, so no report. Thank you.
Thank you. All right. Item number 10, report on Committee on Professional Conduct Legislative Committee and Enforcement Program. 10A will be Committee on Professional Conduct. Mr. Aguilar.
Thank you, President Tu. The Committee on Professional Conduct discussed a possible policy change regarding the CBA's retired status requirement, which could be included in a future rulemaking package. Since the retired status option was implemented in 2014, staff has received frequent requests from licensees to remove the requirement that a licensee holds an active license for 5 years in California to qualify for retired status. Staff reports this is the most common reason a licensee is unable to meet the retired status requirements in California. Staff asked the CPC to approve the removal of the 5-year active requirement for retired status for inclusion in a future rulemaking package. The CBC agreed with the recommendations as outlined in the agenda item, noting that the change does not affect consumer protection. The CBC recommends that the CBA direct staff to move forward with the proposed policy changes for retired status as recommended by staff in the agenda item. This is a fully formed motion and a second is not needed.
Thank you, Mr. Aguilar. We have a motion on the floor. Any questions or comment from the board members? Seeing none, I would invite the public from Sacramento. And seeing none, so please, Ms. Reed, can you take a roll?
Doug Aguilar,
Yes.
Patricia Batchelor, Nancy Corrigan,
Yes.
Nancy Dawn,
Yes.
Carrie Ann Farrell Hines, Christian Lotta,
Yes.
Tony Lynn,
Yes.
Bruce Rafel,
Yes.
Joe Rosenbaum,
Yes.
Teresa Thompson,
Yes.
Yen Tu,
Yes.
and Evangeline Ward,
Yes.
and the motion carries.
Thank you, Ms. Reed. All right, item 10B, Legislative Committee, Ms. Thompson.
There's a second item.
Sorry,
Yeah.
I beg your pardon.
Staff was really busy this time. Well, as usual, I should say. CPC item 4, CBA item 10A2, now transitioning to the discussion to possibly approve a policy change related to the continuing education subject areas, which also could be included in a future rulemaking package. A CE work group consisting of 2 board members was formed in March 2024 at the March 2024 CBA meeting and has met on 3 occasions since to discuss various CE regulation topics. The CE work group reviewed various subject areas, including non-technical, technical, ethics, government accounting, accounting and auditing, or A&A for short, preparation engagements, and fraud. The CE work group recommended the following changes. Allow sexual harassment and workplace violence prevention, workplace stress management, employee wellness, and world languages to count towards non-technical CE. The next item is to remove the restriction on foreign language education as non-technical CE, recognizing that learning a world language supports diversity, equity, inclusion, and professional competence. The third item, rename the specialized industry and industry accounting subject areas to specialized industry knowledge. Fourth, permit excess fraud courses to count towards the A&A CE requirement. And last, remove the 24-hour governmental auditing CE requirement while still requiring licensees performing work under GAGAS to complete 4 hours of fraud CE. The CPC was in agreement with the CE work group recommendations. The CPC recommends that the CBA direct staff to move forward with the proposed policy changes as recommended by the CE work group and included in the agenda item. This is a fully formed motion and a second is not needed. That concludes my report and I'll return it back to President Tu.
Thank you, Mr. Aguilar. Yes, Ms. Thompson.
I have a practical question, and this might be for staff, but should this pass, does that mean that the required sexual harassment and like security awareness trainings we take through DCA would be CPE eligible?
I was hoping
Good
that was the
question.
case, but I think that's still being developed, right?
Okay.
Still.
Very good question.
How could we do that?
That course would probably have to meet standards that we were talking about earlier for delivery and content. But that would be nice, huh?
You want to jump in?
I can't say definitively yes or no, but my guess is more likely than not, because they're not designed to be continuing education, similar to what would be required in our regulations.
Yeah, and the audience is a little different too, I think, maybe possibly. Anyway, but very good question, Ms. Thompson. Good try, good try. All right, we're moving on to item, we need a motion. We already have a motion. You have Lada comment? Ms. Hines?
Comment that the ethics, the DCA does, the DCA, I don't know if it's the DCA or maybe it's because it's presented by the DOJ, but the ethics does count towards continuing legal education. So I don't know if there's a, a correlation there potentially, but just offering it up.
I think staff should look into it for the board members that are interested to know. Yes, Ms. Lada?
Thank you, President Tu.
I understand we have a fully formed motion on the table, but a thought came to mind throughout our discussion today. So in regards to removing the 24 units of government accounting and audit CE, I was curious if we're concerned if removing that requirement will inadvertently increase the probability of licensees having more citations. Similar to earlier today, we had reporting that about 94% of our citations were related to the 2012 requirement. So by removing that government accounting units, could we potentially create more instances like that, but related to the government units, or are we not concerned about that?
I'm not concerned about it, partly because it's removing a requirement instead of adding to. And then, in all honesty, if the way we've looked at it is that 24 units of government accounting is actually, like I said, embedded in the GAGIS and Yellow Book. And if you violate that, that's actually a violation of professional standards, which would likely not warrant a citation. It would probably come more in the form of discipline.
Okay, I guess I was thinking that having it be a part of the requirements kind of gives the CPAs like more visibility to track it, like within their normal CE providing platforms. And so if we remove it, it kind of might make it a little bit harder for them to keep up with it. And if they don't do it, they are still violating our standards. So I was just thinking from a practical standpoint, having the requirement gives them more visibility and tools to stay in compliance. So that was just my only thought.
Sounds like Dominic is saying that it's embedded, those requirement that they need. So, but noted, yeah. Anybody else have any comments? Otherwise, I will go to the public in Sacramento for comments, and seeing none. Ms. Reed, can you take a vote?
Evangeline Ward,
Yes.
Yen Tu, Teresa Thompson,
Yes.
Joe Rosenbaum,
Yes.
Bruce Rayful.
Yes.
Tony Lynn, Christian Lotta,
Yes.
Carrie Ann Farrell Hines.
Yes.
Nancy Dong,
Yes.
Nancy Corrigan,
Yes.
Patricia Batchelor,
Yes.
and Doug Aguilar.
Yes.
The motion carries.
Thank you, Ms. Reed. Now, Mr. Aguilar, are you finished? Just kidding. I'm just kidding. That's on me, actually. So, 10B, Legislative Committee, Ms. Thompson.
Thank you. The first item discussed, the Legislative Committee discussed this morning, was the legislative tracking chart, legislative calendar, and considerations for positions on legislation, which was a written report. There was no action on this item, and this is CBA item 10B1 in the package. Additionally, staff presented an update on Assembly Bill 1175, which was introduced by Assemblymember Jackie Irwin on February 21st. This bill contains language from the CBA to enhance the requirements to qualify for the Uniform CPA exam and obtain CPA licensure and modernize mobility requirements that enable out-of-state licensees to practice in California. After the bill's introduction, staff identified minor amendments that are needed to align the bill language more closely to what the CBA previously reviewed and approved. A new amendment that staff would like to propose for inclusion in the bill provides authority for the CBA to establish regulations to accept board-recognized certificate and training programs as a substitute for a portion of the experience requirement. This amendment would clarify that the board has discretion in the implementation of CBA recognition of This amendment would clarify that the board has discretion in the implementation of CBA recognition of certificates and training programs. Additionally, the proposed amendment would limit an applicant to using either the certificate or training program or an advanced degree in an accounting-related subject to substitute for a portion of the 2-year experience requirement, ensuring applicants cannot completely substitute this requirement. The bill is currently in the Assembly Business and Professions Committee and is set for hearing on April 8th. Staff will be coordinating with CBA leadership to identify a member to participate in the committee hearing. The LC recommends that the CBA authorize the executive officer to work with President Tu and the author's office to propose amendments to AB 1175 consistent with those identified in the analysis. This is a fully formed motion and does not require a second. I will turn it back to President Tu for discussion.
Any discussion from the board? Seeing none. Any from Sacramento audience? Seeing none. Ms. Reed, can you take a vote?
Doug Aguilera, Patricia Batchelor,
Yes.
Nancy Corrigan,
Yes.
Nancy Dong,
Yes.
Carrie Ann Farrell Hines.
Yes.
Christian Lotta,
Yes.
Tony Lynn,
Yes.
Bruce Rafel.
Yes.
Joe Rosenbaum.
Yes.
Teresa Thompson. Yen Tu.
Yes.
And Evangeline Ward.
Yes.
And the motion carries.
All right, Ms. Thompson, do you have
One more.
continue?
The final item on the Legislative Committee agenda was the review and consideration of possible positions on legislation the California Board of Accountancy is monitoring. There are 9 bills currently being monitored by staff. Several bills have been introduced this session as placeholder or spot bills. If any of these bills are amended in a manner that makes it relevant to the CBA, an analysis will be conducted by staff and presented to the CBA at a future meeting. Staff did note a couple of issue areas that may take greater importance later in this session, which include charter school audits and artificial intelligence auditors. There was no action taken on this item, and that concludes my report.
Ms. Thompson. And now we are going to item C, which is Enforcement Program Oversight Committee. Ms. Dong.
Thank you. So staff
Oh,
provided.
hold on, Ms. Dong. I forgot to say, please, any more board comment? Seeing none. Public comment in Sacramento? Seeing none. Now the item is over, and Ms. Dong, you can continue.
Yeah, so we're returning to item 10C. Staff presented some really helpful information about supervised practice for probationers this morning, and I think it's going to be useful for us as we move into discussions about stipulated settlements later on in this agenda. Staff presented an overview on the use of supervised practice as a term of probation. They noted that the topic is being presented as there has been an increased use of this term when a license is granted through a petition for reinstatement. Following an overview of supervised practice as an optional term of probation, staff outlined the role and qualifications of what is called a practice monitor, also known as a monitor, the process for selecting a monitor, and the use of the monitor's reports in the probation process. Prior to the EPOC meeting, members provided suggestions to improve the documents used to monitor this process. These include adding a statement for the practice monitor to affirm that A, there is no personal proferessional relationship with a probationer, and B, adding a statement notifying that both parties that the probationer shall pay all costs for any such monitoring. Additionally, based on member feedback, staff will explore including information either on the plan of practice or in a discussion during the probation orientation regarding the probationer's responsibility to take steps to ensure confidentiality with information that is provided to the monitor. Moreover, staff highlighted several considerations to add clarifying information when CBA members include the term as a condition for the reinstatement of a license, such as targeting a specific practice area requiring supervision, the number and frequency of engagements for review, and whether the review should occur pre or post issuance. The EPOC took no action on this item, and that concludes my report.
Thank you for that report. Any comments from the board? Seeing none. Any comment from the audience in Sacramento? Seeing none. All right. Thank you for that. We are now moving on to item number 11A. And that item is for future California Board of Accountancy meeting. Are there any agenda item from member of the board that you might want to suggest for future board meetings? See none. Anybody from the Sacramento audience? Seeing none, we are then moving on to item number 12, which is our closed session pursuant of Government Code Section 111, wait, 11126E. Do I need to read that? No. Okay, in that case, we're going to item closed session. All right. At this time, we will be moving closed session to deliberate on closed session matter. Once closed session is complete, CPA will adjourn. For those who are interested, you don't have to come back if you don't have any business with closed session. You know, it's a lovely idea. Why don't we take a 5-minute bio break and be back? Yeah, 2:40.